welcome, senior management, and thank you for your time. Let's jump right into it. It's no secret that technology is continuously shifting the arena of insurance today as we know it. Emerging technology provides opportunities for traditional insurers to modernize and reinvent themselves per se, and it also forces them to respond to new sources of competition from increasingly well-funded and nimble software-based companies that are beginning to make inroads in the market by focusing on unmet customer demand, bringing down the cost and providing new services. Insurers can no longer do more of the same and expect to grow, right? Technology and innovation have created a new world of opportunity for individuals, businesses, and society. The reality is customers, inventors, and employees really all demand innovation. Indeed, they expect it not only from technology providers and device manufacturers, but also from insurance organizations alike. So in this video, we're going to examine how specific technologies are beginning to reshape the insurance landscape and the potential opportunities facing the industry moving forward. So to explore some of these opportunities and potential impacts rising for the industry, we're suggesting a few innovative strategies that can help influence and impact our insurance arena moving forward. More specifically, these 5 topics are unmanned aircraft systems, autonomous driving, online quoting, on-demand insurance, predictive analysis, and DriveCam. The insurance innovative imperative underscores that in order to make the most of the future ahead, the industry needs to pivot from a traditionally risk-averse culture to one that encourages experimentation while also mitigating risk. So progress is clearly underway at many leading organizations as they seek to respond by evolving to customer demands and differentiating themselves from new, more nimble competitors like we mentioned earlier. But we're also finding that there's no silver bullet to create a more innovative organization to generate new ideas. So instead, insurers and intermediaries will need to navigate their own path. So bold action is certainly required. So in order to capitalize on this new world of opportunity and learn how these innovations can help drive better efficiencies for our organization, we've got to adapt our way ahead and tap into these new sources of innovation. So let's dive more into detail in each one of these recommendations, starting first with how unmanned aircraft systems or drones can impact this industry and its potential benefits in our arena as well. So I'll pass it off to Olivia, where she'll provide a little bit more context on this topic. Olivia?
Unmanned aircraft systems are more commonly referred to as drones in today's society. However, there is a distinct difference that should be pointed out when referring to these types of aircrafts. A drone is the aircraft itself that does not require direct human contact from inside or on the aircraft. Similarly, the unmanned aircraft systems, or UAS, is the drone and all other equipment necessary to operate it. This may include controllers, cameras, sensors, and more. Unmanned aircraft systems, or drones, are becoming widely popular in a vast array of industries. Drones provide some industries with the capability to do their previous tasks more cost-effective and efficiently, while other industries have had new doors opened with the advancements in unmanned aircraft. Let's take traffic reporting as an example. During rush hour traffic, one sound you will most likely hear is the roaring of a helicopter overhead to gain aerial footage of the traffic situation on a major highway. The costs associated with running a helicopter include storage, maintenance, fuel, crew, equipment, and more. Imagine if thousands of dollars could be saved by both small and large news organizations just by using these small machines that can be operated from the ground. An article published earlier this year by the Insurance Journal predicted the top 4 industries utilizing drones by 2020. 42% of commercial drone usage is expected to be in the industrial inspection industry, 22% in aerial photography, 19% in agriculture, and 15% in the insurance industry. Unmanned aircraft systems are without a doubt one of the fastest growing industries in today's society. In 2015 alone, 1.6 million drones were sold in the United States, with 600,000 being for commercial use. By 2020, the 600,000 number is expected to grow to commercial drone sales of 2.7 million. The industry is constantly adapting and evolving as new technology is discovered. As time progresses, the unmanned aircraft system industry is making leaps and bounds forward. This past August, the FAA granted a waiver to CNN, which allowed their drones to fly over top of people in the United States. This was the first organization to gain this type of approval from the FAA. This was a huge step for the industry and opens the doors to many other organizations who seek to expand their use of drones. Drones are projected to become the most dynamic growth sector within aviation over the next few years. Unlike many other innovations, unmanned aircraft systems have a large effect on the insurance industry as a consumer. Insurance is designed and purchased in order to protect individuals and companies from unexpected circumstances, many of which can be considered quite dangerous. For example, recall the previous damage to life and property from Hurricane Katrina. Countless insurance adjusters were sent to the hardest hit areas to begin assessing the damage as soon as possible after the storm. However, due to the extensive flooding and damage, it was unsafe to get to some of the hardest hit areas. Because of this, gaining an accurate assessment of the damage took quite a bit of time. Now, fast forward 10 years, when companies such as AIG have their own drone technology just for this purpose. They are able to pilot drones from safe locations and assess some of the hardest hit areas that would have been previously unable to be reached. This provides the opportunity to help save life and property that may have been otherwise destroyed in the past because of the time it took to reach these areas. Drones can also be helpful in non-emergent situations where damage may be extremely widespread. If a hurricane such as Hermine were to hit Miami, Orlando, Jacksonville, Savannah, Myrtle Beach, and continue up the East Coast, the damage would be catastrophic. Such widespread damage may exceed the number of available adjusters. Drones may be used in this scenario, which would ultimately help the insureds receive a much faster claim resolution.
Thanks, Olivia. I would like to highlight that the use of technologies to automate and supplement tasks routinely performed by us, humans, is expected to grow at an exponential pace. So in this regard, drones have really come a long way, right? So bringing with them, though, the potential to disrupt traditional business models that we know today. So while the term drones is usually equated, with the U.S. military fleet of unmanned vehicles used for generally surveillance purposes, it's finding its home in commercial enterprises. So drones are well suited for commercial use and will certainly have a large impact on the insurance landscape as we know it today. So again, thanks a lot, Olivia, for painting that picture for us. So now let's turn to Ryan, where he'll provide context on how autonomous driving is another innovation evolving within our industry at a rapid pace. Ryan?
For our next topic, we will examine the potential impact on the property and liability insurance industry due to the advancement of partial and fully autonomous vehicle technology, also known as AV technology or just AV. The property and liability insurance industry stands to be one of the most affected industries as the risks and exposures associated with traditional automobile liability shift from the driver to the manufacturer. There are still many unknowns in regards to AV functionality and adaptation in our society, but there is clear evidence that the auto industry is quickly adapting to AV technology to the benefit of the general public. Over the next few slides, we will not specifically focus on the technology advances of AV, but rather our focus will be on the potential impacts that AV technology may have on the property and liability insurance industry. There are numerous beneficiaries of AV technology. The most prominent beneficiary will be the general public due to the potential decrease in auto accidents. 93% of auto accidents involve human error, and 76% are caused solely by human error. Partial or full AV technology can greatly reduce the economic and medical impact by removing the human error out of auto accidents. AV technology can also enhance the ability for people to access transportation, enhance infrastructure capabilities due to safer conditions, and potentially lower emissions with intelligent driving. There are many positive aspects of AV technology that will affect a wide range of industries. Any business that operates owned, hired, or non-owned vehicles may potentially see a sharp decline in liability and medical costs associated with auto losses. On the flip side, there is a much smaller group of parties that may be negatively impacted by advances in AV technology. Those parties include businesses that are in the public conveyance industry and those directly or indirectly working in the auto insurance industry. In regards to auto insurers, next we will take a look at the key statistics that highlight the potential impact of AV technology on the property and liability insurance industry. Auto insurers collected $200 billion in auto premiums in 2015. Some experts say that 80% of this figure could disappear from the industry due to advances in driverless technology. In a report last year, KPMG actuaries estimated an 80% drop in the U.S. accident frequency rate by 2040. Among its assumptions, by 2020, some fully autonomous vehicles will be available and authorities will be experimenting with upgrades to road infrastructure to help driverless cars navigate. Deloitte forecasts approximately $200 billion in personal car insurance premiums to hold steady for 7 or 8 years, then slide to about $40 billion by 2040. It projects about $100 billion of this $200 billion could migrate to product liability insurance. The data tells us that there is potential for a sharp decline in the ability for auto insurers to accurately and confidently write auto liability physical damage coverage. A key issue for insurers is calculating appropriate rates to charge for AV driving, including the cost of vehicle repairs and medical care for injured parties. Today, actuaries have sufficient data to collect auto accidents based upon the number of miles driven. The actuaries are able to promulgate rates which are subject to state approval. The potential future issue is determining how much to charge for liability and physical damage coverage if there is no driver. Also, additional concerns for insurance relate to technology, such as computer network breaches. These issues may force insurance companies to realign their capital, market structure, and professional knowledge away from auto insurance and into other product offerings. As detailed in a publication by the RAND Corporation, AV driving may shift liability from the driver to the manufacturer. Thus, even though an autonomous vehicle may be safer overall than a conventional vehicle, it will greatly shift liability and therefore change the way insurers protect people and assets. Liability for drivers is typically determined by answering the question, who is at fault? By shifting liability from a negligent driver to the manufacturer, the bodily injury and physical damage losses now become product liability claims, which tend to be much more expensive and take longer to resolve. In addition to strict liability for their products, manufacturers may be found liable for defects in their manufacturing, design, and lack of warning. Current product liability law may restrain manufacturers from instituting AV technologies due to the exposure of expensive litigation. The RAND study makes a strong point that the future of AV liability will be driven by federal and state regulations as well as court interpretations. The social benefits of AV technology are likely to be substantial. Therefore, in order to maximize the social benefits, policymakers need to structure liability and regulatory principles that won't undermine manufacturers and disincentivize them from making life-saving products. The product liability insurance industry should expect continued advancement in AV technology, which will greatly reduce the expected number of auto accidents by removing driver error. Due to the advancement of this technology, auto insurers can anticipate a sharp decline of written auto premiums in the next 7 to 8 years, if not sooner. The potential loss in auto insurance written premium and revenue may shift to product liability or other related insurance products. In addition to the expected increase in product liability, insurers can be proactive in innovating products that add auto exposures onto other insurance products that will be driven by market demand.
Thanks, Ryan. And if I may add, no one really has a crystal ball that can predict the future, but our team is convinced that a period of unprecedented change really has begun in this industry. So, as carriers start to navigate the shifts ahead, our team believes that insurance executives and senior management like yourself are going to need to first contemplate and then ultimately address a series of key considerations that Ryan briefly talked about in his presentation. So we're going to shift focus here. We're now going to talk about online quoting, and I'll pass it off to John, where John will give us more context on some of the key recommendations we came up with as a team. John?
Online quoting has skyrocketed over the past 10 years and now plays a major role in the front line of insurance pricing. This great innovation has saved a lot of time and money for insurance companies as it is a simple and quick technique for potential insureds to receive an insurance quote. I would like to discuss the following 4 categories regarding online quoting: the millennial impact versus traditional methods, online quoting's efficiency and adaptation, information technology, and the evolution of online quoting. Online quoting has exploded since the millennial generation first reached adulthood. This generation grew up using some form of computer and are the most comfortable using updated technology versus older generations. Today, millennials are the most likely to obtain insurance quotes online via the web and mobile applications. Online quoting is fast and easy, which is ideal for the generation that uses modern technology the most. It is simply the most convenient for a group of people that are constantly on their smartphone, tablet, or computer. Furthermore, millennials are much less likely to use traditional methods of obtaining an insurance quote, such as calling into a customer service department of an insurance company, visiting a local agent, or mailing in an application. From now into the future, the success of insurance companies depend on millennials. There is clear evidence that online quoting has provided strong efficiency for insurance carriers. A consumer can simply go to an insurance carrier's website and obtain a quote in minutes. This allows the consumer to obtain multiple quotes in one sitting at little to no cost to the insurers. Also, to add to the millennial benefits of online quoting, there is no human interaction, which is a strong benefit to many millennials who do not prefer face-to-face or phone interactions for non-personal communication. Also, there is no need to pursue any of the previously mentioned traditional methods, as the quote can be provided within seconds of submitting an application, granting no errors in that application, of course. Online quoting is also blending in with other forms of modern technology that is creating much ease for doing business. The demand for information, such as online quoting, has shifted the traditional focus among numerous IT departments throughout the world to the adaptation of more modern systems. Since the millennial generation is expected to demand more digital communication with firms, insurance companies must adapt to such demands and turn their heads towards their IT departments to start the process. Legacy systems today are designed for human worker workflow, assume the use of phones and postal mail, and assume customers are willing to wait for a response. These assumptions are no longer true, and the new insurance customer demands information and service on mobile devices and web, which are completely different design philosophies for application user experience experts. Another example of this, besides online quoting, is the use of smartphone applications made by an insurance carrier that takes photos of property damage and in return provides a preliminary estimate to a customer in just hours. This allows the possibility of claims being settled, paid for, and closed just hours after being reported at very little to no cost to the insurer. This is the type of technology that millennials strive for. In 2006, companies such as Mortec, a mortgage software company, introduced online quoting to their customers. It didn't seem to be a trustworthy experience for consumers, as this was a new feature brought into the world. More and more insurance carriers started to allow this technology into their business cycle in order to save time and money for the company itself, its employees, and the customer. 10 years later, online quoting has adopted to many new technologies, including smartphone and tablet applications.
Thanks, John. So the insurance industry is changing faster than ever before, and like I mentioned earlier, it's really no secret, right? Online insurance quoting systems are now automating activities that once required full-time employees to handle. And big data is transforming what we know about consumers and how to adapt and deliver better messaging to them. However, this innovation certainly is going to come at a price, but it doesn't have to be a deal breaker. So senior management, we recommend that we give our prospects the best of both worlds, and one that offers an automated, robust insurance quoting system backed by our one-on-one counsel to help them determine just the right coverage that fits their needs. So this is not only going to give us a competitive advantage, but it's also going to make for an easier workflow. Now we'll shift focus and we'll talk about on-demand insurance, and I'll hand it over to Brendan, who will give us more details on that subject. Brendan?
My piece of the presentation will discuss the insurance for the on-demand economy. There's been a lot of different innovations specific to ensuring on-demand economy workers and contractors given the unique space that they operate in. This piece will discuss what the on-demand economy is, as well as the insurance innovations that are being innovated to ensure their work. Let's begin. First, we have to understand what the on-demand economy is. The on-demand economy simply is any service that you could obtain at the leisure of an application. For example, when you summon an Uber, that is the on-demand economy. When you book a room on Airbnb, that is the on-demand economy. When you use Thumbtack to book a contractor to help you mount a TV or something like that, that is the on-demand economy. And in short, everything that you could hire someone to provide a service based off of an application, that is the on-demand economy that we operate in. This new on-demand economy creates its own unique risks. For example, with Uber and Lyft, they are operating strictly as commercial drivers. However, they're not actual taxi cabs or commercial driver, or don't even possess a commercial driver's license. For example, when you operate in an Uber vehicle, once you turn your car on, that is your car. Once you log into the application, now you're technically a contractor for hire under the guidance of Uber's application. Most personal lines policies exclude commercial use and commercial application of that vehicle. So what the on-demand economy presents is an insurance solution to be able to provide you coverage while you're operating as a contractor or a commercial vendor using one of these on-demand applications. A specific example is once you log into the app, you're technically the contractor. Then while you're going to drive to the person that has requested you to be their chauffeur, you're still technically not covered by a policy because the Uber policy only kicks in once you're performing a ride. And your personal lines policy only kicks in when you're just driving yourself. So that gap is really what is being insured by the on-demand economy insurance products. I mentioned previously the different examples of on-demand applications: Lyft, Dolly, Airbnb, Thumbtack. There's been different insurance products that have been created to insure these operations. Airbnb, most commercial renters or homeowners policies don't insure commercial use. The on-demand economy can provide coverage for that. Thumbtack, unless you have some type of insurance as a licensed contractor, if you're just doing stuff as a handyman, there is really no insurance. The same thing goes with Dolly and their mover services. However, different insurance products can be procured for that use. There are two companies that have really taken this risk by the horns to be able to provide coverage. Slice Labs, based out of New York, has received a number of venture capital, but they create insurance policies. They serve as an intermediary between various different insurers and reinsurers and the user, so that they technically are an insurance company, but the paper that they use is not theirs. So they're able to create a policy based on what is needed for whatever activity you're doing and for however long that is taking place. And they insure your operations while you're performing that activity for whatever premium they assign. The same thing could be said for Trove. Trove is not in the United States yet. It will be in the United States in next year. However, they give you insurance when you need it. You can turn it on and off, and it can insure anything that is done in the on-demand economy, whether you're acting as a contractor, as a driver, or whatever. In short, there's a lot of different occupations and activities that are being done currently in 2016 with various different applications, and a new class of workers that are not formal employees. They are contractors, but they're only contractors when they want to. There's no formal agreement. This new class needs insurance, and the insurance that is insuring the on-demand economy is providing that to them. Thank you.
Thanks, Brendan. And lastly, our last topic for recommendation concerning the industry will be predictive analysis, big data, and drive cam presented by Leldon. Leldon?
Yes, thank you very much. Next, we'll look at insurance industry innovations, predictive analytics, big data, and drive cam. One of the first things we should ask about big data: why would you only want to look at a small portion of information? Think of big data as an iceberg. Only a small portion is exposed or seen. However, much larger mass is hidden underwater. What is predictive analytics? Well, Wikipedia definition is encompasses a variety of statistical techniques from predictive modeling, machine learning, and data mining that analyze current and historical facts to make predictions about future or otherwise unknown events. Why is big data important to insurance, you may ask? Well, 4 critical aspects that allow for insurance companies to be better prepared in a competitive marketplace are listed on the left side of your screen. According to an Ernst & Young 2015 Global Insurance Outlook study, insurers across all regions are capitalizing on data analytics, cloud computing, and modeling techniques to sharpen their market segmentation strategies, reduce claim fraud, and strengthen underwriting and risk management. Creating modeling to better understand the anticipated actions of insureds allows for proactive versus reactive cost decisions. Just as when you drive a vehicle, you must look in front and behind you. If you fail to only do one of these, you just might find yourself involved in an auto accident. Plan ahead. How are we going to use this data? How can we either protect our company or capitalize on new business opportunities? One of the main keys to success, using analytics to your advantage. According to the National Safety Council in 2011, every 5 seconds an auto accident occurs, and every 12 minutes, unfortunately, a fatality does. In the U.S., over $230 billion is spent each year on auto collision claims. Over 80% of these accidents are caused by driver error. DriveCam is a new and innovative tool that is being utilized by consumers, so the next step is for insurers to get in the game. Progressive Insurance recently came out with a new snapshot tool that is a plug-in device that you may have seen on local advertisements. DriveCam is simply the next step by constantly videoing, but only capturing a triggering event of both the driver and the roadway just prior to and after an accident. Investigations and liability are much easier to determine. There are both many beneficiaries and reasons for such a tool as DriveCam to better allow for insureds to better understand their risk tool. However, whomever is selected, the end result is the same. Money can be saved not only by the insurer, but also the insured through lower premium, cost, claims investigation, and liability. Identifying the risk and correcting the behavior is simply the next step in the insurance game.
Thanks, Leldon. Well, senior management, there you have it. These are the considerations from our team, some of the considerations of innovations that will certainly change the industry moving forward. On behalf of our team, I'd like to thank you for your time. If you have any questions, please don't hesitate to reach out to us. We're looking forward to hearing your feedback, hearing your considerations. I hope you have a great day, and go Noles.